morning to all traders and welcome to this Wednesday's market insights video on gold and oil. Before we go on to the charts today to see our weekly Elliott wave analysis, just to give you a heads up of what's really happened in the markets yesterday, we've had Pelosi's deadline being reached yesterday, like naturally, since it was a 48-hour one. Mnuchin obviously traveling away, he couldn't really respect that deadline, to be honest. They had a call over the phone for about 45 minutes. There seems to be some common ground, actually. Now, Pelosi was happy with the call. They say that there might be an agreement of around $2 trillion. However, it's unlikely to be the case before the election. And that's not just because there is no time for the two to agree, but also the majority of the Senate have pretty much decided that they're not going to cast a vote before the U.S. elections, as this is going to pose a risk for the nomination and confirmation, I would say, of Amy Coney Barrett to the Supreme Court. Now, that has allowed, and in general, the uncertainty leading to the election is allowing gold to move higher because a potential stimulus is indeed good for the economy at the moment, but is rising concerns because we have unlimited money printing, and this is posing a threat to global economies, of course, because a low interest rate environment for a longer period is really something that keeps investors cautious, at least for the longer term. Now, oil, on the other side, remains on a sideways market. We've had the API reports yesterday. We had a crude build, and also before the election, markets also are expected to remain a little bit, actually investors, I would say, are to remain very worried about the actual results because there is very good likelihood, and the polls are actually showing that Biden is going to win. And he is not, his agenda is not really favoring the oil markets. So I think until the November 3rd, we're going to see volatility remaining high in the oil markets as well. But for the short term, and today in particular, we're going to have some further clues about the direction of the oil, at least intraday, maybe also by the end of the week, moves dependent on the AI reports. So starting with gold, I haven't changed my view, to be honest. I still believe we are moving down in wave 4, and we're expecting another move to the upside for wave 5. That said, 1, 2, 3, if this is indeed 4, it looks like it's a double zigzag, right? It's a running flat and an A, B, and a C again. So I would be expecting wave C to take us to, well, if we take W and X down here, to around the 1955, right? If that happens, however, just pay attention that if we move that high, it means that we're not going to have an impulse down here, right? Because an impulse, we have that actually here so far to 1931. An impulse would mean that wave 4 is not going to cross above wave 1, and this is not going to be the case, obviously. But what could happen is that this could be wave 1, and we'll get wave 2, we get wave 3, wave 4, and 5 for an ending diagonal in wave C, right? Or the other scenario would be that this is a 1, 2, 3, 4, and 5 that ended up here, down here to the 61-point Fibonacci extension of waves A and B. Yeah, and that means that this is a wave A down here. This all is a wave B, and we're going to see a wave C moving down, right? Because this moving above 1932 would mean that this move down here is a corrective move to the downside rather than an impulsive. This would also change this to an ABC, which means this would be a W, X, and Y instead of an ABC, right? So we'd have an ABC over here for a W, then our X in the triangle X, and a Y for another ABC. Now, if we jump quickly on gold, last week we talked about this being also in wave 4, right? Down here is wave 4. Now we are doing a 1, 2, 3, 4, and 5 for an ending diagonal, right? Do you remember this? We've had the, if we pull the Fibonacci tool, we are nearing the 4193 for wave 3, right? And I want to see that taken out, then moving lower to get us to the unsetting trend line of this triangle, and then move higher to the 43.84 to complete this move to the upside, which, by the way, is part of primary wave 4 that we still be looking for a move to the downside to continue, right? Now that will depend, of course, on whether the U.S. election gives us a Trump or a Biden presidency. The other scenario is that we finished wave 5 up here. This is an A, this is a B, and we're going for a wave C, right? And that would suggest again that we are in wave 4. Okay, but the previous scenario could also suggest that we're not in wave 4. This is a wave 5 ending, so it could be also a primary wave 1 instead of 4, right? So which means that we could see a wave 2 over here and then continuation to the upside. Last but not least, of course, I've been looking at this as a potential move to the downside, with this being 1, 2, 3, and this wave 4 becoming some sort of triangle before we continue lower, which means wave 4 ended up here, and the move to the downside is impulsive. We had a sharp wave 2. The rule of alternation is being respected here. It can either be a triangle, it could be like a W, X, and some sort of Y move over here, which is going to see more downside. But as I said before, I am expecting the oil markets to remain volatile until the November 3rd deadline. So thank you very much for watching, guys. If you have any questions or an alternative scenario in mind, please do not hesitate to comment, and I'll get back to you as soon as I can. Thanks.